Good afternoon. This is Nick Inman from VolumeProfileTrader.com on Friday, October 28th. And first things first, before I get into our weekend analysis, I'm going to be hosting a free Q&A for anyone who's interested. The date will be November the 4th, Thursday. So this coming Thursday. And if you're interested, go ahead and go on VolumeProfileTrader.com. And there's going to be a box that's labeled 5 free videos. You just enter your name and email there. And no, I'm not going to send you 5 free videos unless if you want it. What I'm going to do is record, the people who register for the next couple of days and assume that, you want to be a part of the Q&A. So I need to send you, login information for the webinar that I'm hosting. And I'll send that out probably Wednesday night or sometime on Thursday. So if you're interested, any questions are allowed, anywhere from beginner to, any intermediate or expert questions, that's fine. And, we're going to have a good time, get some questions answered, and hopefully help you become better traders. So anyways, enough of that. Let's get back into what the market's done. I think the S&P is up around 3.7% for the week or something. It continues to roar higher from these lows that we made back on October 4th. And, if you were following me, I've been talking about, this was a buying opportunity. It continues to be a buying opportunity. And how do we know that? Well, look, guys, it continues to move higher. And I talked about how these lows right here, I thought that we were in a box, and I didn't think the risk reward was there to be long. And sure enough, the next day we gapped up to I think it was 1270. So it's okay, so much for, that being the ceiling. Continue to be long. And as we got into the weekend today, it only makes sense to ring the register, take some money off the table, guys. This has been, even if the market continues to go higher, this has been one heck of a move in 1 month's time. I believe I read an article saying that it's the best move in 1 month's time since October 1974. I believe that was the date. And so, basically what we're seeing here is a very nice uptrend. There's clearly too much pessimism in the market, and it's showing that we're either having a ton of short covering or we're having a lot of money managers who weren't long the market. They were sitting in cash, and they have to put cash to work, and basically they're buying on any weakness. And you can see this blue line, which is the 55 period moving average on this 60-minute chart of the S&P. It's pretty much been the buying opportunity the last 3 times the market's dipped. So it'll be interesting to see if the market dips again, if it will hold again. As the market continues to rise, though, there's a higher likelihood that we will meet resistance and, see a bigger sell-off. Not saying that sell-off won't be a buying opportunity, but to say that, hey, money managers, people who are trading, they're taking money off the table, and the selling pressure is too big to, the buyers can't overcome that. And that's fine. You just want to be on the right side when that happens. So let's get right into this. Today was a do-nothing day. It was an inside day. And what I mean by inside day is here's yesterday's range, and today's range was literally inside of it. And that's, from a day trader standpoint, that is a low risk, low opportunity day. And considering that it happened on a Friday, it makes it even, it's almost like take the day off, do what you have to do in the morning in terms of, taking a trade or two, or taking profits really. But there's no need to be a part of the market going into the weekend. No need for any weekend risk. It's just unnecessary. So, really there's nothing to show here on the S&P other than stay long, but, keep your stops, in various at various levels. So, so you're not all risk, you don't have a ton of risk at one particular level or on one particular day of the market. Let's say the market on Monday opens, at wherever and whatever prices, but let's say it closes 2% on the day. Well, you don't want your profits, or at least some of your profits, to be exposed to that 2% downdraft. So what you should do is have a stop under today's intraday low on some of your positions, and if you get stopped out, that's fine. You're just securing profits, and if the market or that specific underlying ends up moving higher, you can always buy it back. So let's move on to silver and see what's going on with the silver trade. One more thing about the S&P is we're almost at that 1300 level, and our resistant levels are 1300 and 1325. And those are the two levels that you want to look out for. 1300 because it's that psychological 1300, and there has, back in the earlier half of the year, there were some key pivot movements at the 1300 level. So, I wouldn't be surprised to see some selling pressure into it, as we've seen, yesterday, the end of yesterday into today. Even though we closed higher on the day, I'm sure there were a ton of professional traders that were taking profits or protecting their downside by hedging themselves. So anyways, all right, now let's go on to silver. Okay, if you've been following me, I've been a part of the silver trade since it broke out from these levels a couple days ago, sometime at the beginning of the week. And we're seeing some significant follow-through on the SLV trade, the silver trade, and what I see now is a bull flag forming, and I wouldn't be surprised if we have a move higher on Monday. And that's just because the common pattern that forms with bull flags, you can see a bull flag formed here, and we're seeing it again. And I said last night in the silver analysis, wait for some more sideways consolidation. And guys, this may be it. This is what we saw last time before a rocket move higher. I believe this move was around 5%, and this move was around 5%. So I can only expect that the next move's gonna be around 5%. And that would take us to, around $36 or so on SLV. I'm assuming that, it just looks like it's about to move higher, and that tells me that there's too much pessimism in silver, just like there is in gold and the market in general. And, when you have the Fed doing what they're doing, and it seems like whenever they step into the markets and implement their policy, silver, gold, commodities, they tend to go up, the dollar tends to go down. I don't think it's anything that's not obvious. They're telling you what they're going to do, and your job is to be on the right side of that trade so you can make some money and profit from it. So silver, if you're long, stay long. I would keep a stop right under today's intraday low, and if it keeps on roaring higher, then just keep raising your stop. That's what I would do, and that's what makes sense. So first things first, for Patriot Coal, I can only say, wow, I was not expecting. I guess I was expecting this type of move, because I did say $12, $13 was our price target, and sure enough, that's what we got. If you've been following me, our buy point was around $10.20 Monday morning, and we got it on that weekend analysis. I was saying that I believe it was $9.90. That was our line in the sand, and wow, this has been a rocket of a move. We're up nearly 30% on this trade in 1 week, guys. This is what stock market trading is about. This is the trades that we look for, and we're seeing it. We continue to see strength in Patriot Coal. It continues to work in our favor. I'm one to sell into strength, but this is clearly showing you there's no reason to sell. And unfortunately for me, I capped my profits at around 15 to 20% for my entire position. So yeah, I lost out on some opportunity, but that's all right. That's trading, and I'm not going to complain. There'll always be another trade. But if you're long this name, first of all, congratulations, and second of all, don't be afraid to ring that register because that's just a big money sign right there. The last underlying I wanted to cover is oil, and the reason why is if anything's going to put a damper on a recovery in the global economy, it's going to be oil. And the reason why I say that is because it's clear that any country that's going to struggle financially to pay its debt will be bailed out. And it's been shown, for example, with Greece and everyone over in Europe, they can't pay their debt, but they're getting bailed out. And what it's doing is it's putting confidence in the global economy to continue doing what it's doing. And, with all that money printing that's going on, especially with dollars, it's in my opinion, devaluing the dollar and increasing the price of commodities. And that's one reason why we see silver, gold, even oil moving higher. Now, I understand oil is also a demand play. I get that. But it's just so hard for me not to look at the fact that when Fed implements policy, oil goes higher. And, their terminology is saying, hey, oil's going higher because demand, and if it goes too high, it's artificial, it's temporary, etc. But all I see is oil goes higher when the Fed implements what they're doing, and sure, when the Fed is implementing what they're doing, the economy's it stays steady, but people and businesses can only pay so much for gas prices before they're like, okay, well, we can't do this anymore because, it costs too much. The oil costs, we have to cut back, etc. And it's going to kill any economy or economic recovery. So there's a real fine line between, what's too high for price of oil and when it gets to that level, it kills economic activity. And then when it gets lower, obviously, naturally, economic activity picks up because people aren't spending it as much for, gas to put in their car. And that allows them for some extra discretionary income. And that's good. But, as we see the market rise, oil's rising too. And where I'm getting at is, this thing's had a rocket from 75, which were the lows, and now it's trading in, the mid to low 90s, around 93.50. And, it's clear as day to me that we're going to $98 to $100. And the reason why I say that is because, let me give you a little bit of picture. Look at this. This was 3 months of consolidation from May to July, and you can see our point of control was at 98. Let's call it $98, close enough. And it sure looks like since we've broken out from this consolidation pattern, which, one thing to say about this pattern is it's been textbook. We saw our rising wedge pattern, which means our lows and our highs are approaching an apex, and basically we broke down and had a nice trade to the downside. And basically we found a nice low, and we traded straight back to that point of control level, and we eventually found a base above it and broke out. And now what we're seeing is a flag pattern, a multi-day flag pattern, and I'm looking for more upside in the market because that's what the trend is telling us. And so if you're an oil guy and an oil trader, I would say $100, $98 to $100. That's your profit target on oil. And hopefully it's the ceiling on oil, and oil comes back down to $90. But long term, I have a bullish stance on oil, and I think that everyone should, just because you pay for oil with fiat currency, and fiat currencies, all of them eventually go to go to zero or, pretty much nothing. They're not anything. All they are is a promise. And so, unfortunately, this is the one downside to any market rally, is that oil's going to rally with it. And that's going to lead to less discretionary income for everyone who likes to buy things. So, sorry for the ramble. This is a pretty long video, but I figured it's appropriate for the weekend. And if you have lasted this long in the video, remember I have a free Q&A coming up this coming Thursday, and all you have to do is go to volumeprofiletrader.com and sign up in the free 5-chart box. And basically what I'm going to do is, because I don't have a opt-in form for this Q&A, I'm just going to assume that the people who register are going to be attending the Q&A, and I will send you the information to enter that webinar on Wednesday or Thursday. So everyone, I hope you enjoyed this video. I hope you learned something. This is Nick from volumeprofiletrader.com. Have a good weekend.